The economy has had its weakest growth in a decade, according to new statistics from the Hong Kong HKSAR government, showing the economy only grew by 0.6% in the second quarter. A plunge in retail sales in July increases the city's risks of falling into a recession.
There's certainly a risk of a recession. You can see that in leading data like retail sales. You can see it in the huge slowdown in investment. So there's certainly a risk that the economy as a whole will enter into a proper recession.
Retail sales in Hong Kong fell 11.4% in July, a bigger decline than the previous month's 6.7% drop. According to Bloomberg Economics, GDP data for the third quarter is expected to confirm that the city is in a technical recession.
So retail sales contracted more than 11.4% year-on-year in July. And looking in the details of that number, you can really see a slowdown in tourist spending. So for example, jewelry sales, which are a good proxy for the spend of particularly mainland Chinese tourists in Hong Kong, fell by more than 24% year-on-year in July. So the economy as a whole is slowing, not only because of slower consumer spending from tourists and so on, but also lower investment from businesses due to the uncertainty that's created by the protests and the risk of a crackdown from mainland authorities.
According to analysts, visitor arrivals in July fell 4.8%, reversing June's 8.5% rise. The number of visitors from China's mainland also reversed the previous gain to fall 5.5% in July. The drop became severe right after the protests in Hong Kong International Airport in August. Analysts also say retail sales could be a function of observing consumer confidence on a whole because of wider regional factors, and also whether the protests escalate or there is some hope of a resolution. CGTN, London.